The following program is paid for by EG Tax. All opinions or statements expressed on this program are solely those of EG Tax or its guests and do not reflect the opinions of News Radio 930 WBEN or Odyssey.
The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and it may be in the middle of the year. It's May, almost. Half of the year is gone, but we want to make sure that we're creating the best tax return for 2024 possibly. So that's what we're here all about. I'm Esther Gulius, the Tax Lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And of course, I'm joined in studio with Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. And Tiffany Fabian.
Hey, happy Saturday.
Happy Saturday to you, too. So, this is all about this time of year. We're not actively involved in the tax season, but let's face it, every day is tax season, right? Because you're making decisions that once you make that decision and you close the door on the decision, that affects your tax return.
Yep, it does. Like taking money out of your 401k, changing your withholdings, putting money into a 401k.
Selling a rental property,
Yep.
et cetera, et cetera. And that's what we're here all about. By the way, since it is the middle of May, something you might want to do is like a midterm correction. Give us a call. We'll take a look at your withholding, go over everything, and make sure that you're on track for your return that you do at the end of 2024 to make sure that when you're filing it in 2025, you're good to go.
Right.
Right?
That's
Yep.
right.
I had somebody today that texted me and said, gee, even though, it's just we file jointly and we take the standard deduction, I think I'm going to have you guys look at it. And let's face it, there are so many things that can go wrong on a tax return. Maybe you didn't include income. Maybe you didn't take advantage of the special tax treatment on dividends. Maybe your kid was in college and you gave the credit to the child rather than you taking it. Or maybe you did energy conservation. You weren't aware of that. There was a credit. All those things can save you money, and that's part of what we want to help you with.
Right.
Yeah, absolutely. Somebody the other day had a simple return that I looked at, and their money from the HSA, they added it, subtracted it wrong, and so the Schedule 3 was done wrong, causing them to owe more money. So you'd think it was a simple return, but they did the HSA on the 8889 incorrectly,
That's because when you answer these questions, especially if you're a do-it-yourself, yourselfer, you don't really know what you're answering.
Right.
And so if you answer the wrong answer, it puts it on the wrong form, which changes the answer.
It does.
Right?
It does.
All right, I'm Esther Gulius, the Tax Lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Wanted to talk about the changes in 529 plans. First, let's talk about what a 529 plan, who benefits, and what the change is.
Sure. A 529 is your college savings plan. You put money in there for your children and you hopefully
Or grandchildren,
and hopefully it grows. And when they go into actually it's any type of schooling now, high school, college, you can pull that money out and pay for their education. So that's what a 529 is. And if you put it in a New York 529, you get a subtraction on your New York return, $5,000 for single, $10,000 up to $10,000 for married filing joint. So,
but didn't you tell me there was a change in?
Right, I was explaining what a 529 was first.
Right. So now explain the change.
And the old rule was you had to use the money by age 30. Okay, so by the time your beneficiary hit age 30, you either had to pull the money out and pay tax on the growth on the federal, and then pay tax on everything on New York State.
Thinking they'd be done with college then, right?
Right,
In school.
right. Or switch the beneficiaries. Now they got rid of the age requirement. So you can carry a 529 for your beneficiary till they're 65, 75, forever. It's pretty amazing. But also, the unused funds, you can start rolling over into a Roth IRA. So the amount you get to roll over every year is the amount equal to what your contribution is by law into a Roth. So if they're under age 50, it would be $7,000.
So the bottom line is a 529 is a really good thing. It's a deduction on New York State. It's tax. The growth is tax-free on the federal if you use it for higher education. And now there is no age limitation. So the 529 can be really a great move for you.
Correct.
Yeah.
Yep.
And really, when you think about giving a gift to your child or grandchild, many times you don't know what the heck to give them because they got everything. What a wonderful thing, but to give them a slip that says, I have just put money into your 529 plan on New York State, and then, of course, you, who gave the contribution, gets a subtraction on your New York State return.
Right. You'll appreciate it. The 5-year-old may not, but because they're looking
Right.
for the new bike or
Transformers.
That's true.
yes.
But thinking of most kids, they have everything.
Yep.
They have everything. So that's one of the changes we wanted to make sure we talked about. And the other thing is, this is the beginning of spring and summer. And, I thought, what a great time to talk about businesses and being somebody that might want to do something in the gig economy. And I thought it would be a good time to talk about it. The other thing is, of course, if you do have a business, whether it's an 1120S, subchapter S corporation, a limited liability corporation, or a partnership, what do you have to do before the end of the year if it's an existing business?
Your BOI, which stands for Beneficiary
Owners
Information.
Yep. And you have to
Tracking.
do
Right, and
that with the Financial Crime Network.
Right. How about that for a fun thing? So BOI FinCEN has to be done by the end of the year on existing businesses that were established before 2024. The failure to do so is a potential fine up to $500 a day that you're late, up to $10,000. So it's nothing to shirk your responsibility. You got to make sure you do it. If you want help with that, EG Tax is doing the BOI FinCEN for $50 for the first 3 owners, right?
Right.
Because we have to upload all this stuff. There's all kinds of certification that you have to guarantee. So if you need help, if you have an 1120S partnership or subchapter S corporation, and you need help with your BOI FinCEN, EG Tax will help you,
Yes, we will.
right?
Yep.
Yes.
You want to go to
All
Kay or Mark, or you want to wait? Or,
Okay, well, we'll go to Kay first. Hi, Kay. How can we help you?
Hi, thanks. Who's making up all these income tax laws that change every year that we have to obey and keep track of? Who writes these laws?
Well, this is Congress does it.
good question though.
I mean, when what we find is that the head of the party in power suggests some tax law changes. The House and Senate agree or disagree, rewrite what has been proposed. They vote on it, and once it's voted on, it becomes law, and then the president signs it, does the final thing, and signs it into law.
For instance, right now we are under the guidance, the auspices of the Trump tax changes. And so when he was in power, he proposed certain tax changes. And then, as Esther said, Congress modified it, people voted on it, and that's where we sit with some of those changes right now.
But they are going to expire this year, so it's interesting that you should bring this up. Some of the tax foundation said that they're proposing the first thing, the tax reform for growth and opportunity. They're proposing that profits be taxed at 20%. Right now, the bottom line is 10%. Then the second proposal is that we go to a broad-based value-added tax, which would then eliminate the child tax credit, the earned income credit, and the child and dependent care credit, and they'd replace it with a rebate. And then the next thing is an increase in federal gas tax of 35 cents a gallon. And then the next thing would be eliminate the exclusion for employer-sponsored health insurance, making it fully taxable. And the final thing that they're proposing is a 50% top personal income tax rate.
Well, why can't Kay and I propose some changes? Right, Kay?
Well, I mean, let's face it, you have to balance everything with paying the bills. And as long as they're spending more money than we have, it's a problem. It is a big
It's got
problem.
to change.
I know. I agree.
Thank you.
Thank you for your call.
Thanks.
I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. Let's go to Mark. Hey, Mark.
Hi, Esther. I couldn't wait to for Sunday to come. About 4 weeks ago.
This is Saturday.
I'm sorry, Saturday. About 4 weeks ago,
That's
I
all
called
right.
you about a letter I got from the IRS. I filed the IT 229, which is the property real estate tax rebate, right?
Right?
And I got a letter from the IRS stating that I needed to file the IT 214. And I contacted you, and you said, well, they make a lot of mistakes.
Right.
That's probably what they did. Well, anyways, I did file the 214 for them. And then last week I got a letter from the IRS stating that
New York State.
Yeah, stating that I owe them $400. Now,
Okay. Did you bring that in? Did you bring it into Mark?
No, I did not.
You got to bring it
got
in.
it last
We'll unscrew the spaghetti.
You might have to. Well, let me just go into this real fast.
See, the 229 is a different credit than the 214. So the person that told you to do the 214 gave you bad information. The 229 is what you needed to do. So just come on in.
Was that what you were going to say, Mark?
No, what I'm trying to tell you is I get Social Security. I do not file a state return or a federal return, but I did for the property tax rebate.
Right, of course.
Yeah,
of course.
So I don't know where they're coming from that I owe them this money. So you're saying I have to come into the office?
Yeah, come to our corporate
Come
office.
to our office. We'll fix it for you.
Well, they gave me a deadline to answer them, so
Well, that's because they're going to add more interest to the money that you don't owe. But since you don't owe it, you don't have to worry. So come on in. We'll help you.
All right, I will do that. That's the best thing then. All right, thank you for helping.
Thank you.
Bye-bye.
I'm Esther Gullius, the tax lady from EG Tax. We're going to take a short break. We'll be back on the other side with your calls and questions and comments. Hey, I'm Esther Gullius, the tax lady from EG Tax. We're here to help you. If you want to give us a call in studio for whether you've gotten love letters, your refunds being held up, you're getting bills from the state or federal, 8030930 is our phone number here in studio, 8030930, star 930 on a cell phone. And again, we were mentioning before that if you have a small business, you want to make sure that if it's 1120S, LLC, or a partnership, that you get your BOI FinCEN done, because the fine is up to $10,000, and actually it goes up to $200,000 and 6 months in jail. But I haven't even talked about that. That would be if you grossly ignore it. Whatever that is.
And
the other thing is, I want one sec, Tiff.
Okay.
Bread savings is 5.25% on a 1-year CD. Wanted to toss that in there too.
Yeah, and that last caller, I just want to hit on what they said. Really important. So even if you don't have to file, you're below the filing threshold. New York State gives you a refundable credit for paying property taxes. It's called the IT 229, and it's up to $350, and it's a wonderful credit. It was there in 22 and 23, so you potentially have $700 on the table if you're somebody who usually doesn't have to file, but you pay property taxes. So give us a call if you have questions. We would love to help.
Absolutely. Okay, let's go to our, we got a text. Should we do the text first?
Yeah, you want to read that, Chris?
Sure. It says a 5-year-old inherits $500,000 from the grandfather's IRA. Grandkid has 10 years to draw about $50K per year. Can the grandkid, who's age 6 years now, file as a separate single person for the next 10 years, or is it combined with the parent's income?
Oh, good question. What do you say?
Well, there's a lot of different things out there about the minors inheriting. They actually have until they're 18 to start taking it out of the inherited IRA. So there's some, if you read some.
So what you're saying is that it continues to grow and the kid doesn't have to take the money out. Then once they're 18, they have to start taking it out on an annual basis.
Correct.
So the mom and dad don't have to worry.
Right. They still
And
get,
it's a blessing. The money grows. By then the kid will be ready for college, right?
Right.
And it'll be taxable, yes. And it'll be taxed at whatever rate we're doing at that point in time. But at least that's a great thing for the parents to know.
Yes.
Okay, great. And then we got Kevin. Hey, Kev, how can we help you, sir?
Hi, good afternoon. Hear me?
Yeah, I can hear you. Sounds like somebody's at your front
Great.
door.
Okay, thank you. I have two questions here. Here's the first one, Esther. On an IRA, I found an IRA from a place I used to work many moons ago, and I invested it, with a firm, to see if I could do stuff with it. But here's what, on an IRA, as far as I last read, that if you get a penalty, of course, if you pull it or whatever, but from 60 and a half, is that correct? Is that the
59
age?
and a half, unless you qualify for an exclusion. There are about 9 exclusions which make, if you take money out of your IRA before age 59 and a half, that would make it also not subject to penalty. So it all depends on the reason why you took it out.
Okay, now, and just to extend on that same question of my two that I have for you. So is there such a thing as a partial withdrawal from an IRA, or once you pull from it, that's it? You have to pull the whole thing.
Okay,
Could you do a partial withdrawal?
Okay, so let's say you have $100,000 in an IRA, and you got your back against the wall, you're under the age of 59 and a half, you don't qualify for any of the exclusions, you're not totally permanently disabled, it's you aren't taking it out to buy your first house, and so on and so forth, and you take out $5,000. That $5,000 is a partial withdrawal of your total IRA, but only the amount that you take out is going to be subject to penalty and tax.
Oh, okay. And very lastly, since you good folks are, on the pulse of taxation and stuff here in New York State, have you heard anything at all? And I'm gonna be non-partisan here, so I'm not identifying any party or anything, okay? But
Right.
Have you all heard anything about New York State thinking of adopting what some of us call an exit tax? I know, gruesome news.
California has, that's true.
Right. So you work so hard all these years and you build your money and now you're ready to move. And as they say, if California sneezes, New York catches a cold. I want to see if
Isn't
they get
that
a
the
worse
truth?
cold.
That's absolutely true. Absolutely true.
Tell me,
I have not heard
is there any
anything like
truth in
that.
that or any in that?
Well, we haven't heard anything
Yeah.
that they're putting that in the works yet.
Right, but-
at
and
least they're
let's-
not saying it.
And let's hope.
Right.
Don't give them any ideas, Kevin.
Well, my tip to folks: if you're leaving New York State, don't tell anybody where you're going. You know why? The very same people who ruin here will follow you and go and mess up wherever you're going to. That's my tip. But anyway,
All right, well, that's a great tip,
folks.
Kevin. But let's hope
Right.
right now that New York State is not going to follow suit with California. I don't know if that's even actually passed in California, but I know that they were batting it around.
Yeah, just we'll say we'll be like the Baltimore Colts, the old Baltimore Colts, and leave at midnight in the dark and exit the state.
That's true. All right, we got another text. What's the text?
Yeah, it says, with regards to the 529, is there an income phase out for the New York State tax break?
Not
No.
that I'm aware of.
No,
Right, Chris?
no, there is no,
No.
income.
So
phase out.
you on New York State, you're good to go.
Right.
So that's a wonderful thing if you're on a high tax in New York State, which can be like 10%. And you put in 10,000, it saves you $1,000 in tax.
And is there a carry forward for that credit? I don't think so. Like I'm thinking about.
It's not a credit; it's a
Oh,
subtraction
right.
from income.
Yeah,
right.
Yep.
Yeah, I mean, just make sure you're putting it in a New York 529.
If you want it as a deduction on your New York return.
Correct. Yes.
And of course, you get no benefit on the federal. So that's why when you take it out from New York State, if you did not use it for education, it's going to be taxable on New York State, but only the growth is going to be taxable on the federal. So that you have to do your bookkeeping to keep track of everything. So it's just like anything. You always have to make sure that you have your records because somewhere down the line, you may have to verify that this is what you did and this is what you paid.
Right, and we just did that with somebody with a
The
stock.
stock.
You know,
Right.
So they do look at it. It's very rare, but they do look at it. So
And especially now that they have the IRS agents that they've hired, so they now have the manpower to go ahead and do many of the audits that really people kind of got spoiled when there was COVID because nobody had the ability to open up envelopes on top, right? I mean, they had people sending tax returns in. They didn't have time to and manpower to open up the envelopes, much less audit you. But now the worm has turned. So you want to make sure that you dot your I's, cross your T's, which is really, really important.
right.
Right?
Yep.
All right, I'm Esther Gulius, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We want to help you. And we're going to take a short break for the news. We'll be back on the other side. To us, you are family, and I'm Esther Gulius, the tax lady from EG Tax. We want to help you. You can give us a call. We actually talk to people on the phone. The other day, I just did a vacation yesterday where I had to book the airline, book the cruise. Oh my God, I spent 6 hours in talking to a human being. My gosh, you feel so happy. Wait, are you a person? I'm talking to a person, because then you can cut to the chase. Oh my gosh. But anyway, at EG Tax, we do cut to the chase and we want to help you. So believe me, if you have a question, give us a call. There's no charge for us to give you information. We certainly want to help. And don't forget the BOI FinCEN that Tiffany just did on that commercial. It is no joke. I had one of my clients yesterday said, "Oh my gosh, I don't have an extra $500." And I said to him, "It's not 500. It's 500 a day till it gets to 10,000. So it's nothing to sneeze about."
Right. And that's for you have to the end of the year for pre-2024 businesses.
Right.
If you just started a business in 2024, you have 90 days to do this.
Or else they tack on that wonderful
penalty starts,
$10,000.
yeah.
Right.
So-
Okay. Another thing I want to tell you about, I told you about Bread Savings is 525 on a 1-year CD. Bread Savings is 565 on 2 years. So think about that. 2-year CD, 4.65%. So it's something to think about too. All right, I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, and we have a text, right?
We do. It says, "Hi, Esther. I'm looking for an elder care lawyer. attorney, they put, and value your guidance. Who would you recommend? Thank you very much.
Well, we work with a number of attorneys. I know Jeffrey Katz is a wonderful attorney. Alan Bear is his partner. Dennis Kitchen is a wonderful attorney. I think Jeffrey Katz and Mr. Bear are Barry. I guess it's Barry. Katz and Bears. I think about that. It's raining cats and bears. But I think that is their field of expertise.
Yeah,
so
and Chris has their number memorized, don't you?
Pardon me?
Chris has their phone number memorized. What is it,
What
Chris?
is their phone number, Chris?
633-3363.
And really, they're just great. And I'm going to tell you, if you're somebody that's thinking, oh my gosh, at some point in time, I really don't want the nest egg that I saved for my whole life to go to a nursing home, and you're thinking that you'd probably want to be a good candidate for Medicaid, so that the federal government helps pay for your nursing home. If there is a 5-year look back, you got to pre-plan this thing before it's too late. I know I have a client that didn't do that, and they're paying about $18,000 a month for the nursing home, and her large estate is dwindling down because she didn't go and pre-plan, and that's so and that's so important that you do that. Unless you are a very wealthy person and the income that you have from your investments is going to pay your nursing home, which is not too many of us, you just might want to do some elder planning.
Right.
And one of the things would be putting your home in a life estate, right?
Yep.
Right. A simple little thing like that is, protect your home, and that's a great thing. It keeps it in your name. You control the house, but after 5 years, the nursing home can't touch it.
Yeah, now, the other thing they're thinking about doing is on the exchange, the tax-free exchanges on investment for investment. They're talking about eliminating that. So if you're thinking about doing the tax-free exchange, I would suggest that you maybe take a look at it sooner rather than later.
Right.
Because as the year goes on, they're going to have to deal with the tax law changes, and that may be one of them that's coming down the pike.
Right. And if you do it the right way, you have to hire a qualified intermediary.
An exchanger.
Yep,
right.
An exchanger. It's not just a lawyer. It's somebody who has to be licensed in that. And if you don't, because you think, oh, it's too expensive, well, they could come back at you and say, well, guess what? You didn't do it right. You owe us all that money you thought you saved.
Right. Well, I had a client the other day that said he's thinking of selling his 2 rental properties, and how much of the tax is going to be. And I said, when I got all done with all the work, about $110,000. I said, why don't you do an exchange? Because he's really he really is good at being a property manager. And he says, well, I'm thinking of turning my house into a rental. And I said, why don't you sell your home? The first $500,000 is tax-free because it hasn't been a rental property. Do an exchange on these 2 other pieces of property and exchange it for another rental in your area, and then buy a new home.
Right. That's
So
a really
that
good
I
idea.
said, now look at there, you saved all that money.
That's a really good
And
idea.
that's just part of what we suggest. Now, if you don't do what we say, we still love you, right?
Yeah.
But we want to give you another way to think about it,
Yes, for sure.
thinking outside the box, right?
Especially if they're thinking on closing the door on certain exchanges and things like that. So just
Right, absolutely right.
Yeah.
All right, so it's springtime, and everybody has, let's face it, with inflation, everybody's feeling the pinch. So this is a good time of year to maybe do a small business. And I was thinking what it would be: gardening, landscaping, cleaning out basements, maybe doing painting, if you're a handy person, dog walkers, groomers, doggy daycares, working at a seasonal job like a country club, ice cream stand. Uber and Instacart, of course, are not just a springtime job. One of the best ways of doing the delivery is with Instacart. Instacart really makes money. Uber drivers, not so much. Lyft drivers, not so much. But Instacart, you make money, and that can be all year long. Daycare employees, maybe because the kids are out of school and a mom and dad that might be teachers, that the kids are out of school, you make some extra money being a daycare provider, photographer, tourist guide. This is Niagara Falls, right? And garage sales. I mean, these are just a few things that you can do to make extra money to help you where it's pretty tight.
Yeah, I know. Friday I gave a big hug to Robin. It was on her own choice. She takes off every summer and goes and does a coffee shop, and so she really enjoys it. She gets to put her feet up and read a book and look at the lake. And
because she's up in Olcott.
Yep.
So if you want the best coffee, really, Robin sells it up at Olcott, and it's such a great time to do it.
Yeah.
So I guess what I'm saying is maybe maybe you're looking at your budget and you think, oh my gosh, I got too much month at the end of my paycheck, and you need something to do to make extra money, and you are a good gardener, and maybe you see this house in the corner that could use some landscaping, or put out a flyer that you'll clean out a basement, or do garage sales, of which many garage sales would be completely tax-free because you're selling your stuff at a loss. Right?
That's right.
Right.
But all of these things, you can pick up some extra money, and if you need help with that, you can give EG Tax a call. We'll help you with how to get the thing set up so that you're in compliance at tax time.
Right.
Yeah.
For sure.
Right?
You want to read some
right.
of these texts?
Yeah.
Okay. Hello. Are people that check tax returns trained tax professionals, or are they just data entry computer people? Thanks.
Our people are trained tax people.
Correct.
I mean,
Yeah.
I don't know who does it on the federal or state level. I have to believe they don't just say to somebody, go out there and take a whack at it, because tax law is so confusing. You have to know what you're doing, or otherwise you would give really bad information. So, yeah, I
So you
think
can only
that
speak for
definitely
us.
they put people through training.
Yeah, you would agree, Chris?
They may know IRS and New York State. They may know some things, because I have been on phone calls where you have to, and audits where you have to train the person,
Right.
teach them what is.
But they
something.
don't just put anybody out there.
Right.
I mean, but the thing is, taxes are so complex that you might know A through B, but in this situation with this client, it might be C through E. And you have to say, oh, that would be true. But in this situation, this is what happens. So that's part of what we do at EG Tax. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break, and we'll be back on the other side with your comments.
We are family. I got all my sisters with me.
Hey, I'm Esther Golias, the tax lady from EG Tax. Thank you for being part of our show on Saturdays from 3 to 4. We've been doing it for 20-some years, right, Chris?
Yeah. A long time.
How can that be?
Impossible.
But we sure have fun,
Yes, we do.
right? Wanted to give you another tip. Marcus by Goldman Sachs is paying 5.10%. BMO Alto is 5.05%. Want to make sure I let you know about these CD rates, because if you're getting, Marcus is paying 5%. Now, Synchrony Bank is paying 4.9% and 5%. So just wanted to let you know some things. Okay, we have some text here, Tiff, right?
Yeah, we have two texts. The first one says, "Hi, Esther. I paid my taxes electronically this year, both state and New York, through my tax person's program. That was in March. No money has been withdrawn yet from my bank account. Should I be concerned?"
Holy moly, yes, sirree, Bobby. I'm going to tell you what happened. Either they put the wrong routing number and account number in there, or they didn't fill out the direct deposit information, and you're going to be ending up paying penalty and interest. So you better check with your whoever does your taxes to make sure that you double check to see what happened, and then you want to make sure you get that thing paid right away.
Exactly.
Yeah, initially I was thinking, well, what date did they put for the money to come out? But you're not allowed to put a date beyond the due date.
After April 15th, that's
Yeah.
the maximum date.
Yep,
right?
yep. So there's
So, yeah, and so here we are, May 18th, and so it's now a month and three days since, the other thing is you might want to make sure that return was sent. Maybe it never got sent.
Yeah, maybe it rejected.
Right, maybe it got rejected. A rejected return is like you never even sent it in.
Yep. So
Anyway, and then we have another one from Mike, right?
It was
Line
caller.
one. Mike?
yep.
Hey, Mike.
Hello, Esther.
You know, Mike, how I love you. Did you ever get them tax returns sent?
Yeah, got it in, but I understand that they allowed the 17th of May as a due date for 2020.
they did.
Yeah, they did. Right, for
3 years from the due
2023.
date, but I
Right.
got it in just to be sure on the 15th of
Well,
April.
of course, I mean, you don't want to say, gee, how long can I go and still come
Oh,
under.
for sure,
you
for
know.
sure.
But, yeah, so what can we help you with, Mr. Mike?
Well, you're talking about part-time help, doing stuff, gardening, maybe shoveling
Right.
snow, doing your roof, cutting your grass. Does that stuff actually, can that be paid in cash without getting in trouble?
Okay, so paying in cash does not make it not taxable. It means that you're cheating.
Uh-oh.
So when somebody when somebody says, "I'd like you to pay me in cash," that does not alleviate the fact that in the event they get audited, and the IRS says, "Gee, explain to me how you live in like this lifestyle with no money," they will assess you based upon the money that you spent. So paying in cash is not something that I would recommend. You can pay in cash as long as you report it, but it's all taxable no matter how it's paid.
Well, if it's paid in cash, don't you have to pay
Self-employment
like
tax.
an employer has to pay?
Self-employment tax.
Social Security and
Well, of
everything
course
else?
you do. Right. I mean, no matter how you get paid, if they pay you by check, if you do a barter where you say, "I'm cutting your grass, will you babysit my kids?" I mean, it's still taxable no matter, even if no money exchanged hands. And then after
But
all
you're
your
still gonna be
expenses are
ahead.
taken. Pardon me?
He'll still be ahead. Whoever does self-employment, it's still be
but
ahead.
but it's the law. What are you going to do, right? I mean, the law says you have to report all income that you earned. And when you're doing landscaping, snow removal, God, there's not too much snow removal this time of year, I hope. All of those things are taxable. You get to reduce it by
That's what
your
I was gonna say.
expenses to
Mileage.
reduce that income, though.
Yeah, mileage, using your equipment, gas for the lawnmower,
Snow blower,
clothes that you might have to wear for
Protective clothing.
protective clothing,
advertising.
cell phone.
My concern is more so on my side, paying somebody.
No, you just pay them. It's up to them to report it.
That's exactly
If you
right,
pay
Mike.
them over $600, you would have to give them a 1099.
Okay, I understand.
Right, but you're good.
Okay, thank you.
All right. Thanks, Mike.
And I had somebody the other day, they have rental properties, and they're like, well, I didn't put down the person I paid $150 for cleaning or $50 for this because I paid them cash, and, but I want to put it down. And I said, well, you can't because you didn't give them, you paid them cash, you have no receipt. And I said, congratulations. They're like, what? I said, you're paying their taxes for them on
That's
money
true.
you don't have anymore. And they're like, what?
That's
Yeah.
true. So you got to understand, if you had expenses of $1,000 and you paid the person in cash, and that person's not claiming it, and you can't deduct it because you didn't give them a 1099 or a W-2, so guess who's paying taxes on the $1,000? You are.
Yep. So,
Okay.
You know.
And then we got another text.
Yeah, there's two texts. The first one says, how does health insurance tie into auto insurance? I was thinking,
I'm
maybe
thinking he's listening to the commercial.
That's what I
Yeah.
was thinking. That's what I was
So,
thinking.
the financial guys have a health insurance and well, they have an insurance brokerage, and so we also have the financial guys person Brian in our office that writes health insurance and does a really great job for a lot of people, and they'll also help you with your automobile insurance, and that's the only connection I can think of.
Right.
Yep, that's it.
Right?
Yep, there used
And
to
then
be
what else we got?
There used to be a time. It says, can you describe how there could be risks between a revocable trust and irrevocable trust with respect to protecting an elder parent's assets in case he has to go into a private nursing home prior to the VA home being 100% disabled?
Well, because an irrevocable trust has its benefits and its drawbacks. The benefit of an irrevocable trust means that it's irrevocable. You can't fix it. It's the way it is. It's set in stone. However, now when you inherit assets out of an irrevocable trust, there's no stepped-up basis. So that's the downside. That just happened this year, right?
Right.
And so going into a nursing home, if you have a revocable trust, basically means that that money is just hanging out there to be used.
Right. And we're not lawyers.
And the nursing home will do it for you. But yes, Chris, and we're not lawyers, so you want to make sure that you run this by your attorney.
Yep, like Jeff Katz and Barry. Really good idea because it is really confusing. And it sounds like prior to the VA home being 100% disabled, so then once the VA comes in, then they don't have to pay as much as what it sounds like.
But isn't the VA completely tax-free if he's living in a VA home?
But it sounds like he has to be 100% disabled.
They don't charge you to live in a VA home, I don't think.
From that text, it sounds like he has to be 100% nursing home prior to VA home being
Yeah, but the thing is, check with your attorney.
correct.
Right?
Yeah.
Exactly.
Okay, so we were talking for a little bit there, like Michael was talking about, some of the people that could help you in the summertime and the income that you might get. And that income then is reduced, even if it's in cash, by all of your expenses. So, and you want to make sure if you're performing some of these sales that you get a sales tax number from New York State, right?
Right. You don't want them coming in.
Right, and advertise, flyers, internet, Facebook, set up a business plan, kind of figure out what target people you're trying to look for. Make sure you have business hours,
Yeah.
because if you're acting like a business, you ought to act like a business.
Yeah. Sorry, Chris. I'm really, really sorry. And if you don't do your sales tax, New York State will slide in and make up.
Shut you down.
They'll make up sales tax figures for you. But what were you going to say, Chris?
You mean that's after they get you,
Right.
right?
Yep. But also,
But here's the thing: make sure that you do accounting. You can stop in to our corporate headquarters at 1890 Colvin, and we will give you an accounting book. If you're non-electronic, real simple, income and expenses, and keep track of everything, because those expenses reduce the income that you got.
right.
Yeah,
And
Chris, what were you gonna say?
speaking of income, the change with Venmo, Cash Apps. This year, if you take Venmo as a business right now, because they did change it in December 20th or something last year. Right now, it sits, if you take Venmo, either personal or business, and it's rents, whatever, and it's over $5,000, you're going to get a 1099 next year.
Right.
So you have to.
Even if it wasn't for business.
Exactly.
So that's really important too. So you got all these kind of tentacles coming out from the federal government, the BOI, FinCEN, these kind of things where they're requiring you to do certain things. You want to make sure that you're doing things right so that in the event of an audit, you don't lose. You don't want to lose an audit.
No.
Right? All right, I'm Esther Golias, the tax lady from EG Tax. During the week, if you're getting letters, if somebody's been selected to prove your identity, don't think that they're picking on you.
No.
You just really got to go after it and get it done. And if you need help, EG Tax is there. And the other day, I had a client that called me and he said, Esther, I'm supposed to get an $8,000 refund and they just sent me a bill for $5,000 and I don't, and so that's the state will or the federal government will, when they disallow something, they just send you a bill. But then the client came in and we said, oh, this is a form that their accountant didn't do, and so we sent it in, and he's going to get his money.
Yeah.
And but otherwise they'd be very happy for you to pay them when you didn't really need to pay them.
Yeah, there's that. They're responding about the nursing home and the VA home. It says, I agree, you're not lawyers, but you need to stop making the statement that there is no step-up basis on irrevocable trust. There is if you have a inherited power of appointment in the trust, which allows you to change the beneficiary.
Well, and that's great, and we really appreciate somebody listening. If that person, and maybe it's an attorney, would like to call us, we would love to have you on to explain. So that's great, but that's why we say check with your attorney. But if you are, that they just changed the law this year. Right. That the stepped-up basis, where it used to be a stepped-up basis, has been changed. So, and it's really good to hear you're listening. So we really appreciate that. And if you want to call us at 632-7886, we'd love to have you on the show. Right, guys?
That's right. That's right.
But in the meantime, if you're getting letters, if you need your taxes done, if you're somebody that has to do the benefit ownership information to the Financial Crimes Network of the IRS, EG Tax will help you. Like I said, it's $50 to do the first three beneficial owners. We're here to help you. Our office is 9 to 5, Monday through Friday this time of year. We'll stay evenings and weekends if you need help. We'll do things remotely. We want to help you. Right?
That's
Absolutely.
right.
Okay, until next week, I'm Esther Gilius, the tax lady, in studio with Christopher Fabian, Tiffany Fabian. Have a wonderful weekend, and go Bandits.
Go Bandits.
The previous program was paid for by EG Tax.